Hey, what's up guys? Welcome back to the channel. A new generation of buyers are jumping into the housing market at what may be the worst possible time ever. According to a recent poll, many Canadians think that this is the worst possible time to buy a home right now. Interest rates are rising, and I would even argue that housing affordability is already at rock bottom. If you're thinking, you know what, you'll just drive far away and buy a home that's away from the city center into the suburbs, then maybe you even need a new car if you're not able to work remotely 100% of the time. Well then, best of luck trying to get a bargain on a new set of wheels, because of supply constraints, car prices and used car prices have already skyrocketed. Not only is it hard to buy a home, it's hard to buy a car, now it's even hard to buy groceries or even eat out because the gas prices are up, food is up, everything just costs more. For those of you who've owned your own home for at least a year or more, then you're likely seeing some pretty hefty gains. When you combine rising home prices with ultra low mortgage rates, you could argue that existing homeowners have never had it better. With a fixed rate mortgage and home prices rising 20% or even more in the past year, this is the best inflation hedge you could ask for given the current environment. On the flip side, low supply, higher monthly mortgage payments, bidding wars, and rising home prices, not great if you're in the market for a home and don't already own one. This housing market won't last forever. No trend does. I simply can't see housing prices rising at their current pace indefinitely into the future. I just can't. The problem now is rising rates, rising home prices have led to the highest monthly mortgage payment for the average individual. And this crazy run-up that we're seeing in housing prices can be blamed on a lot of things, such as foreign buyers, domestic investors, high levels of immigration, and obviously rock-bottom interest rates. All this combined has caused what we're seeing play out in the housing market. But there's also one other very important factor in at play, and that is our own mentality. As human beings, we're wired to think that what's happening right now will continue to happen going into the future. And this is especially true if something's been happening for a while, you all of a sudden start to feel that this is normal and things won't change. And real estate prices have been going up uninterrupted almost for 25 years or so. That's why we all think that it's normal for housing prices to just keep going up without any interruption, because that's all we've seen. Not many homeowners have witnessed what it feels like when your home is on the market and it doesn't even receive any offers and it just sits there and the market stalls. Especially in the recent market, you have to be prepared for overbidding. It's almost crazy to think that a house can be on the market and not receive any offers. It's almost like a foreign concept. Having a hard time selling your home seems like almost science fiction at this point. Many times over those years, the experts have all claimed that it is bound to end soon, that there's a crash coming, that the prices just can't keep going up forever. They've been calling for this crash, that it is coming, that the bubble is just about to burst. And here we are today. This so-called bubble hasn't burst yet. This market hasn't crashed. And now the common mentality seems to be that housing will never crash. The Canadian home prices only move up in one direction, and that's up. And on top of all that, everyone wants to either live in or own real estate investments in either Toronto or Vancouver. You'll often hear that these are the best two cities to live in. These two core areas, these two cities attract hundreds of thousands of newcomers from all over the world who are all seeking to own a roof over their head. With such a very powerful force of demand and very limited housing supply to satisfy this demand, prices are bound to keep rising, right? It's just simple supply and demand economics, right? Now, before we answer that question, if you're new to the channel or you've seen my content before, do me a huge favor, hit that like, subscribe, and thanks button, because it lets me know to produce more content like this, and you don't miss out on future housing market updates. Here's the thing. Demand is also influenced about expectations of future pricing. Meaning, if you expect prices to keep increasing into the future, you're naturally be willing to pay more today to capture those future gains. In the last 25 years or so, Toronto housing prices have shot up over 450%. And in that very same time span, the GTA's population has gone up roughly by around 45%. So is this more than just a supply and demand issue? Human feelings and human emotions, as we all know, has a huge influence on how the market reacts and how the market goes up and down. And the most powerful of all human emotions are greed and fear. And they're both at play given the eye-popping surge in housing prices. The majority view is that buying real estate or investing into real estate is a no-brainer. It's a no-lose scheme. Investors large and small all around the world are piling into this market, thinking they're onto a path of easy money. And they're not really that wrong if you look at the last few years, the amount of gains that have been made in the housing market. People have been using the gains in the housing market, whether you're a real estate agent or a homeowner or whatever the case may be, to buy fancy new cars, to buy an even bigger house, fancy jewelry, you name it, all the branded items. People have made a lot of money. And it seems like this party trick will just keep on going. And if you take a look at the rising rates, buyers figure that they are better off locking in those rates right now while they're still pretty much near rock bottom. You can see the evidence of desperation all around you. It's in the news, it's on your social media feed. Every conversation you have with another human being eventually leads to the talk of housing. Crummy homes with broken windows or broken roofs in modest or even sketchy neighborhoods are selling for $1 million. Sellers are getting several $100,000 over their asking price. And if you put an offer exactly at the asking price, you'll likely get a text from your agent saying, "Are you serious?" The average price of a detached home in Toronto or Vancouver is around the $2 million mark. If this isn't a bubble, I don't know what is. Unfortunately, a lot of people forget that there's no such thing as a no-lose investment. Whether you're talking about the housing market, whether you're talking about stocks, oil, gold, etc., it doesn't matter. There is no risk-free, no-lose investment. What flies away too far from reality eventually has to come and meet reality. Now, in the long run, the market overall should go up. But depending on your time frame, there should be ups and downs that are healthy for the market. There needs to be points of entry for both buyers and sellers to create a healthy, overall functioning economy. Take a look at tech stocks. They were heavily favored during the pandemic because everybody was working from home, and now they've been beaten up in 2022 as things are opening up. A lot of people forget or are just oblivious to the fact that Toronto real estate took a major plunge back in the 1980s/early 90s, and that market did not recover for many years. I talked about this in detail in my last video, so make sure you check that out if you haven't already. Just because something hasn't happened in a long time doesn't mean it can't happen again. That's the whole point I'm trying to make. Again, the point of emphasis here being that over the long run, there should be ups and downs for a healthy market. But generally speaking, that direction needs to be sustainable more than anything else. And when things become unsustainable for far too long, there is a sharp drop. And that causes havoc in the financial markets and in your lives. And things will eventually pick back up, but when it does, it's anybody's guess. And creating YouTube videos can also be unsustainable based on the sheer volume of hours and effort required to produce just one video like the one you're watching right now. To help me make this more sustainable, become a member of this channel. For just less than $5 a month, you get photo and status updates, early access to new videos, priority reply to all your comments, emails, and DMs, and much, much more. Each video takes time to do the research and put together, but I hope it all adds value to your life. So please consider the membership. It means so much having your support. Link in the description. At some level, I think everyone knows that this is a crazy market. Doesn't matter if you're a real estate agent, a mortgage broker, or an investor, or a homeowner, or whatever else you may be. In fact, there's a couple of old sayings such as, buy land, they're not making any more of it, or the best time to buy a house was 5 years ago. You've likely heard something along those lines every time a conversation about housing is mentioned. Somehow we've all managed to convince ourselves that housing is special and that it only goes up without any interruption. It's almost like it's become a self-fulfilling prophecy. Let's get on to the juicy part. If we take a look at the forecast by Oxford Economics, it shows home prices falling by 24% by mid-2024. What's the rationale behind this drop, you may ask? Higher interest rates and anti-speculation policies, which are already underway, could lead to prices falling starting somewhere around this fall. Now, if these measures fail to correct housing prices and they continue to rise even further, a crash of 40% is on the table, and expect a financial crisis to follow soon after. Looking at this chart, you can see a decline in the housing prices starts somewhere around this fall. And don't expect housing prices to quickly bounce back right after. Let's take a look at that graph one more time. From 2025 to 2030, they see supply outpacing demand and keeping annual growth somewhere under 1% for the next 5 years or so. This allows income levels to catch up and housing affordability to return by mid-2028, or about 6 years from now. Might be time to move to Calgary or Halifax if you're in Ontario or BC, just saying. This forecast is a combination of price falling and stagnation minimizing any major fallout. If this were to happen, they don't see a recession or an economic drag. Most of the price decline would be actually unrealized by owners. And let's talk about this in a little bit more detail of what this actually means. Now, the scenario is not a crash, it's a mild correction at best, especially if you're talking about a quarter decline, which is 2 years in the making. Now, if prices continue this unsustainable climb, then all of a sudden you get into crash territory. Now, in this scenario, a 40% drop would happen, which would lead to a financial crisis. Now, a housing price correction may cause some short-term pain, but I would argue that it's needed for a return to a healthy, normal economy that doesn't just rely on real estate. In the scenario we just discussed, those majorly impacted will be recent homeowners and investors. Long-time homeowners are unlikely to realize any losses since they would be living in their homes for a while. If you're an investor looking for quick and easy capital appreciation, you take a hard look at your numbers as interest rates are rising. Rising interest rates is no longer a what-if story, it's reality. As prices start to fall, everyone will be looking to sell as you don't want to catch a falling knife. This creates a domino effect where investors are trying to sell, trying to beat one another to take as much capital gains off the table as they can while still possible. Then new homeowners would have a hard time justifying their mortgages, and all of a sudden now they're looking towards the exit. All eyes are on the housing market this year, especially now that we're in a rising rate environment. There's just a lot more at stake. If you've been watching my coverage of Canada's housing market for the past year or so, you already know that what's happening here with rapid price appreciation is also happening around the world. Housing prices have shot up all around the world just like how they have here. We're seeing the same play out in US, Australia, New Zealand, London, Hong Kong, etc. So why am I talking about all this? When what really impacts you is the Canadian market. In Australia, early signs are pointing to a downturn in Sydney's property prices. High prices, more supply, and rate hikes are already slowing down demand. Sydney is the least affordable housing market in the entire world, just after Hong Kong. In New Zealand, prices have already dropped 2.3% over February after rising more than 30% in the last 18 months. The balance of power is expected to shift away from sellers more towards buyers as extra supply comes on stream, and rising interest rates puts a major dent in the housing demand. Rising interest rates have a direct impact on home buyers, as you have to continuously reassess your purchasing power. As interest rates rise, more money has to be spent on loan interest. Experts and industry veterans suggest that anyone who stands to benefit from the continued rising housing prices, particularly investors, real estate agents, and mortgage brokers, will naturally pump even more air into this housing bubble, because they stand to benefit the most from this continued run. Again, going back to the concept we discussed earlier in the video, one of the most powerful human emotions is greed. Soaring housing prices in New Zealand are grinding to a halt this year, and Australia is not far behind. As expected, higher mortgage rates are reining in two of the most expensive housing markets in the world, just like Canada. A multi-year boom on housing prices on near zero interest rates has gifted homeowners piles and piles of equity, but is pushing the dream further out of reach for first-time home buyers, especially those on lower incomes. This is happening and has happened around the world, and now the tide is starting to turn. Question is Canada next? Thank you so much for watching. Make sure to check out all the links in the description below. Hit that like, subscribe, and thanks button, and I'll talk to you in the comment section.